on the low end 20%, and a good just standard base hit is 30% for for your options contracts.
Oh, this is how I kind of see Chegg is going to do right now. I had to drop down
Thank you.
4 hour because it wasn't really very clear. Price was going up. It stopped. It went sideways. It came back down. It created that V formation. It kind of stayed in this area. It lingered for an extra day or extra 4 hours. It left. It came back and went back up, and now it's here revisiting it. Jay, we talked about this yesterday. This will be a very, very bold move of Chegg. If it dropped down to this buyer zone down here.
And just keep in mind, guys, this is everything we've been talking about, like over the market Mondays. That line that you're seeing, that is the 50-day exponential moving average. So it's right around that. It's right around that line, and it's in the box. The box is the buy zone. Don't make it more complicated than it is. We buy when the stock's around those lines, and we buy when they're in the buy zones. Chegg is a good company. I think it's going to go back up. Every time that it's hit one of these support lines in the past, it's went back up. So I have no reason not to believe it's going to go back up in the future. And I'm giving myself about a month for it to go back up to my targets.
And Chegg has been continuously on the uptrend since the pandemic. I guess this might be because we have at-home schooling and people need a little bit more help with their work.
Right.
It's just like an ultimate investment. That's what it looks like. It didn't really fall off too bad before the pandemic, but now it's in high demand.
And you guys don't have to buy the option. Remember, when you're buying options, all you're doing is betting that the stock is going to go up. So if you're betting the stock is going to go up, you can just buy shares of the company as well. This is a long-term investment for me, as well as just a good trade at where the prices are. Everything that I buy, 99% of the things I buy as options, I would like own in my long-term portfolio. So you could own this stock. If you don't know options yet, don't rush learning options. It is fine just to have that. I also just want to talk about, before we get into IRAs, I just want to talk about some news. So the Dow Jones is actually getting some new companies into the companies, and some companies are dropping out. As you know, they call it the Dow 30 because only 30 of the companies are in the Dow Jones index. So the new companies are Salesforce, that's ticker CRM, Honeywell, that's ticker HON, and Amgen are all going into the Dow Jones Industrial Index. And then the companies leaving are ExxonMobil, Pfizer, and Raytheon Technologies.
Those are big names there, man.
Yeah. I thought that was really cool.
Raytheon? What?
Just want to have like a news component to everything that's going on. That's important. That's important because, you know, we see that like the energy sectors like Raytheon and ExxonMobil especially are getting kicked out of the Dow because they're not performing. So people hate ExxonMobil so much right now that it's not even in the Dow anymore. So that's definitely a company that has been on a downtrend. You can see it, and hadn't recovered at all. So,
man, we should have put some puts on this thing, man.
All you have to do is follow the money. Does that look like a good company to invest in anymore? We don't invest in companies like this.
Not at all.
We don't invest.
It's been on the down for a while.
Look at it. That's a piece of shit. We don't invest in companies like this. Now,
do you think it'll go? You think it'll go up? Like, would it be?
I think
like
it could go up.
Since 2015.
I think it can go up, but how much?
Yeah, I think it'll only go up when oil gets back to trading like around $50 or $60. Right now, it's kind of been stalled out between like $40, $42, and that's like when I'm talking about like Brent and West Texas Intermediate. Those are the two that you watch to see how oil is trading, and like it dropped under $1 or something crazy like once the pandemic really hit. But right now, it's only trading around $40. And I was talking to my uncle today, and he worked for Chevron. And basically, what they're doing is everybody has to reapply for their jobs, and like this is across the board. Like within the energy sector, all those companies are struggling because oil isn't trading worth anything. So that was like a
Yeah.
big event when all that stuff went down between, I think it was Russia
Maybe.
and Saudi Arabia. They
Mhm.
basically flooded the market with oil, and it damn near became worthless for a little while because they had too much. So it was like oversaturated. And then they had to, it was like a war. It was like a battle because they control most of the oil. So they really screwed up the energy sector when they did that, and which in turn killed like the U.S. oil production for a minute because it's just too much. So
And
that's
you have
something to
to
watch.
That
And you
makes
have to
sense
think on
because
top of that, where are we heading in the future? We have Tesla making autonomous driving cars with no gasoline. We have GM just made a working on a new electric car. Nikola. So even the standard companies like Ford, they're making an electronic Mustang. So all these companies are moving away from oil and gas. So all you have to do sometimes is follow the money. Like what's gonna happen. That's what you need. That's how you know what investments you need to be making. If people are drifting out of oil and going into Tesla, you can see the correlation. If you did a correlation between Tesla and ExxonMobil the last couple of years, you can clearly see. All right, money's been drifting out of ExxonMobil and going into Tesla. ExxonMobil used to be like the fourth biggest company in the world, and now they're like the 14th or something like that. And Tesla's like the sixth biggest company in the world. When it used to be a no-name company because everybody saw the vision of Elon Musk and what he's doing. So you always need to know, all right, the market's going to fall. The market's going to fall. Well, what's not going to fall? Technology is not going to fall because that's what we use. There's no other alternative to it.
not to mention they're doing a bunch of layoffs, right? Companies like
They're doing a
Shell.
bunch of layoffs because they don't have any money. They're not making the same amount of money. Oil prices are going down because we don't need gasoline cars and things of that nature the same way we used to, which is really wrecking the company. It's a reflection of the company that they're doing layoffs because they don't have the same amount of cash flow and money generating for the business. So every oil company, Halliburton, Chevron, Exxon,
Yeah.
are all going to struggle right now. Then can they bounce? Can they bounce a little bit up? Yes, but every time they bounce, I would just look to short it.
Mm-hmm. Great stuff. You want to move into IRAs?
Yes. So who here knows what an IRA stands for? And like the difference between a Roth IRA and a traditional IRA.
I don't know. Let me know.
So individual retirement account. Roth IRA is tax deferred right away, and I think the traditional isn't. Like if you took out of it right now, it wouldn't be tax deferred, right? Something like that.
So the Roth IRA, you are taxed up front, and the traditional IRA is tax deferred. So basically,
Okay.
so with the traditional IRA, you're saying, well, let me ask y'all this. This is all you need to know. Do you think the taxes are going to be higher in 20 years or lower?
Higher.
Higher. It's definitely gonna be higher.
So do you want to be taxed on your money now, and you get to keep all the earnings from Tesla, Apple, Google, Teladoc, DocuSign for the rest of your life, or do you want to say, I'll do my taxes when I'm 40, 60, making a lot of money, and then they can take from it then? Which is the better choice?
Might as well tax.
Now.
No. So that's why we invest in Roth IRAs, and that's why it's crucial that even though if you have a regular long-term portfolio, just a traditional individual account, you have to put the money away in your retirement account. You can contribute $6,000 in the Roth IRA for the entire year, and it's just as important as your individual account. Because imagine having $1 million that's not taxable. It cannot be taxed at all. $5 million, $10 million that's not taxable at all.
I had read that it's better to put the 6,000 at the beginning of the year. Like most people wait till they get their taxes to put inside their IRA, and some people put over time. But I had read it's better to do it at the beginning of the year. That way you get that entire 6%, of interest throughout the entire year versus, you get it at lower amounts, and then you're slowly building up to it.
Mm-hmm. It really just depends on it depends like if you're in it depends on if you're managing your own account, if you want to be more passive with it. But as long as you get that 6,000 in, or you can get close, even if you can start doing with 1,000 right now or 2,000, if you can get 1,000 in, that money is non-taxable for the rest of your life. And you think if you would have put $1,000 in Tesla this year, it would have been worth like that just that $1,000 would have been worth about it essentially doubled. It was $400. So you could have bought 2 shares of Tesla at around 400 in March, and it went all the way to 2,000 plus. So you doubled your money, and if you had that in your Roth IRA, it's non-taxable. So the platform I use is Fidelity for their Roth IRA. I was going to share my screen and just kind of show how you can set that up. Or if David, if you want to, it doesn't matter. If you just type in fidelity.com and Roth IRA, it will we can really walk you through what we're gonna do. And the same stocks we buy in the chat, the same things we talk about: Teladoc, DocuSign, Chegg, TQQ, Apple, Tesla, Amazon, Shopify. You can buy those same companies in your IRA. It's just one is for your retirement, and one is for just your everyday life. And with a 401k, you can't take your money out whenever you want it. Let me see.
Hey, Jay, and let me add a plug to that. So something that people don't really realize that they can do is if you had a job, like maybe in high school or in college, and they were paying towards like retirement, you could basically transfer that money over into one of your IRA accounts and use it to put to work in the market as well. So I did that. I did it with 2 old jobs that I had,
Right.
and I just put that money in the IRAs.
Let me see if we're on there. Mm-hmm.
Did you want to literally walk through setting up an account, or did you want to find
So
out?
what do you guys what would be most helpful to you? Because we can't set up an account if we already have them, or unless somebody wants to. Well, we can't set up an account all the way, but we can show you the website, and I can definitely post it in the Market Monday link. The general chat, the investing chat in the group me, so we can so you can just have it right to where you can put in your information and have it set up. But if it's helpful, we can go over everything. But the main benefits, the main question you need to ask yourself: would you rather be taxed today, or would you rather be taxed later? And I would rather be taxed today and give me all my gains. And keep in mind, you can also trade options in a Roth IRA. You can also trade in the IRA, and you're still taxed up front. So anything you make is going to be, as long as you hold it for at least 5 years, as long as the money's been in there for at least 5 years, is going to be non-taxable. And you don't even have to be 59 and a half for it to be non-taxable. Once it's been in there for 5 years, it's non-taxable. And the great thing about Roth IRAs versus 401ks is if you put $50,000 into your 401k and you just want your money, because I work with 401ks every day. That's what I do. That's what I do for my job. Some plans don't allow you to get your money out. You might your kid could get sick and die. You might not have the ability to take all the money out that you have in your 401k. You could your car could break down and you need some money. You can't take all the money out. In your Roth IRA, you can take out any of the money that you put in and be good. You can take if I put in $300 and I made $700 on Tesla, I can't touch that $700 that I made until it's been in there at least 5 years, but I can take out the original $300 that I put in there at any time. With a 401k or some other retirement plans, you don't have the flexibility to do that.
Don't most companies though offer the 401k Roth option, right? So yeah, because with a Roth, there's a certain cap, right? And so the company provides for people making a little bit, like in their older, making more money, they have that option for the 401k Roth.
So if you make, I believe it's over 125,000, you can't do a Roth IRA, but you can do what's called a backdoor Roth in your 401k, and you just exchange the pre-tax money into Roth money, and you would do that in your investment account the same way. You can still have a traditional IRA and just convert it over, and you can have Roth portions of your money in your 401k, but they are a little bit more, with that Roth money, they still are a little bit more controlling of your money. Like sometimes you can't even trade the companies that you want. Like you might not be able to have some companies. You might not be able to have Amazon or Apple or anything. You might only be able to invest in mutual funds, or you might not be able to, if you just wanted to take your money out because you saw an opportunity to buy a house at a cheap value. You're into real estate. You might not be able to take all the money that you've been putting in each month in your 401k. You might not be able to take it out. But in a Roth IRA, like I said, you can always take out those earnings. But there are more advanced strategies for if you're making over a certain amount of money. You can roll those funds into, you can do what's called a Roth in-plan conversion in your 401k. And you do have the ability to, have those funds invested still after tax that way.
Mm-hmm. But the portion the company puts in,
it's always going to be pre-tax. It's always going to be. You're always going to be taxed on the portion that the company puts in, because they're getting tax advantages by that as well. So they're offsetting their taxes by basically matching you money.
Mm-hmm.
So that's why they do that. And I have the link, so I'll post it in the group me. But does anyone have any? And you can Fidelity is not the only platform you can use. It's just who I have my Roth IRA through. You can have Charles Schwab. You can have T. Rowe Price. You can have Merrill Lynch. You can have Chase. You can have Wells Fargo. You can have a lot of companies for that Roth IRA or IRA. So they're certainly not the only option.
So
Go ahead.
I apologize. I'm still like going in between work and being here. So the 4%, was that the interest that you make off your IRA, or was that the like how much it costs or something like that?
Let me see what we're looking at here. So this is just going over. This is going over like if you have certain stocks, mutual funds and things like that. They have fees incorporated into them, and they all charge different fees for. So it's basically like what we're teaching in the chat really gives you the ability not to have to own mutual funds for the most part, because you can just own SPY, you can own ARK, you can own TQQ, all that. and not have to deal with those high fees. Or you can learn how to trade or invest like for long term. Like you said, if you know when to buy Apple, if you know when to buy TDOC, if you know when to buy Chegg, like how we're showing you, you don't have to worry about those fees and having somebody else run your portfolio for you. So we're trying to have everybody know, all right, when to buy, why am I buying, and what am I buying, why am I buying it, and when am I buying it at all times. So whether that's an individual stock, whether that's the S&P 500, whether that's the NASDAQ, whether that's crypto, whatever it is, what we're going over is teaching you how to buy. So some things have different expense ratios and everything. That's basically what that page is showing. But for the most part, if you were to invest in just like a index fund like VOO or SPY or something that tracks the NASDAQ, there will be no not a high fee if anything associated with it at all. And Brandon, did you want to talk about the sectors? I know we said we're gonna start mentioning the sectors.
Yeah, hold on. I'm driving. I want to pull up my Bloomberg. Yeah, I'm driving back from Houston, Austin. Should have came back yesterday, but it's all good. But yeah, so we always talk about the tech sector, but it's plenty. What is it? 12 different sectors?
Yeah, there's
12 or 13.
You have
yeah.
Go ahead.
So you have these sectors. We always talk about infotech. So of course that would be like Apple, Microsoft. Surprisingly, I believe Amazon is in the consumer discretionary sector. You have consumer staples. I believe consumer staples may be like cigarettes and stuff like that. You have the energy sector, which is oil. You have the healthcare sector. Let me see. Jay, fill in where I'm falling off.
You have retail. You have utilities.
Industrials.
You have
materials,
healthcare. You have real estate
services. Yep. And I guess like something to know about it. What I look for, like a lot of times when I look at the sectors on the day, I like to see. So it's 4 or 5 of those sectors that are defensive. So that would be utilities, real estate, not telecommunication services, industrials, healthcare, and financials. Usually, like when I see that those sectors are up on the day, it's like a defensive day. So everybody was running away or pulling money from like the stuff that we normally talk about. So that's one of my key like go-tos to look for on the day with the sectors.
If we see a big pullback in tech, like the big names like Apple, Tesla, Amazon, yada, 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 one of the places that you could protect your portfolio in the meantime are the utility sector, the consumer staple sector. So that will be a consumer staple will be like Clorox, like the cleaning supplies. Procter and Gamble, they own Gain, they own Tide, they own Crest, they own like Listerine. Johnson and Johnson, they would own like Glade, they own baby powder, baby oil. Companies like that are not really affected at all by recession because they just sell stuff we have to have every day. That's going to be one of the ways you can protect yourself. Also, no matter what we're doing or what's happening in the economy, the big money is going somewhere. So if people sell or take profits in their Apple, their Google, their Facebook, all those companies that are doing well right now, they still have to put their money somewhere. So they might say, hey, Verizon has a good dividend and they're stable. People have to pay their phone bill. So the hedge funds and big banks say, all right, let's park some money in Verizon. And that's a way to protect your portfolio while also getting some dividend income. And dividends, again, just to reiterate, are a portion of the company's profits that they pay to you for being a shareholder. So you will see those sector rotations. With you might see a rotation out of tech into energy for a little while. Me personally, I would just be buying the pullback in the tech sector because tech is really the only thing that matters. But you can put your money in places like utilities or water or a company like Waste Management, NextEra Energy, Boeing.
What about food? Like Impossible Burger?
I don't think they're public. Beyond Meat, you could put them there. They're going to be more of a innovative young company. I like Beyond Meat. I think I think this is a good investment over time. One that would be defensive will be like Campbell's Soup, or J.M. Smucker, like the peanut butter and the jelly spread. So all those things are going to come into play as far as when you're thinking about companies, and you can construct your portfolio like that too. If you have a lot of Apple, you can balance that out and say, hey, I need a little bit of Waste Management. They deliver trucks that I have. They deliver trash. Like they have landfills and everything for trash dumps. I have some of that in my portfolio. Colgate, nothing's happening to Colgate. If Corona pops back up, Clorox is already a consumer staple, and they sell all the cleaning supplies. So they're going to keep selling out for years and years and years until we completely get over this. So it's really just a great investment over time, and it's stable. It's not going to give you the growth that Apple's going to give you, but it will still grow, and it's better than having your money sitting in a savings account.
Hey, yeah, Jay, thinking about that on one of the in one of my Roths, it's like it goes into a mutual fund every month, and I've done better than I expected, I guess, this year because the majority of the money is going to healthcare. So healthcare is like the largest sector in that one security. So it's always good to be diversified like that. Like healthcare would probably be something nice to just throw some money in if you're looking for some diversification.
Like United Healthcare, like people have to pay their health insurance every month, so it's not going away. And then you have the drug makers, or Pfizer, they make like ibuprofen and Advil and all that. Like they're not going away, and they're not really affected by the day-to-day market fluctuations. They're going to get their money regardless. Also, like right now, the defense contractors like Lockheed Martin, they make the missiles, they make the airplanes, they make all that. Like they've kind of been down this year, and they're only going to go back up. There's always going to be a defense budget or a wartime budget for the military, and that's something you want to have your money parked in, or it is an option. Obviously still tech is better, Tesla's better, Apple's better, but it is an option. They pay a dividend along with, that stable growth. So you have the technology sector, the consumer discretionary sector, the retail sector, the utility, the financials, and then they have like these ETFs inside ETFs. So you might have like a fintech sector that has Square, PayPal. You might have a software sector that has like the the Adobe, the MasterCard, the CrowdStrike for cybersecurity. So you just have to figure out, mainly we just want you guys to know, why do you own a company, or what do you like about it? So I have a whole list of companies that I look at, but I have to break it down to, all right, what do I want to focus on? I want to focus on tech. And why do I want to invest? Why do I want to invest in those companies? So again, I like TDOC. Telehealth is going to be big. It's a way to merge technology and healthcare. I like DocuSign. They solve a big problem with notarization. People not be able to sign documents during the pandemic, or you need something notarized. You can just do it on DocuSign, quick and easy. I like Shopify. They solved the problem of e-commerce. I like TQQ because it has everything in it. It has Tesla, Apple, Microsoft, Amazon, Google. It's a way to own everything without having to do anything. And you're getting 3 times the growth of the NASDAQ 100. So Also, you want your chip companies like Nvidia, AMD, Qualcomm. They're in all the phones, so their business is really not going to slow down as long as you have a cell phone in your hand. Not to mention that we have like the Alexa, the little smart devices, as well as the Google Home and the smart air conditioners and refrigerators and things like that. There's always a chip in that. Also, some other defensive names would be kind of cyclical as well, but stuff like Whirlpool or General Dynamics, like your washer and dryer. People are always going to need a washer and dryer or refrigerator. So those are some options.
Hey, kind of to change it up a little bit, but I just want to get your thoughts on it. What do you think about this speculation of this? I want to call it infusion, but what Trump's talking about, and the healthcare officials are like, nah, no, not yet. But that had the market jumping today, I believe. What are your thoughts?
So fill me in. I wasn't watching too hard today. Fill me in.
Basically, people are super optimistic, thinking that this is gonna be like the cure for COVID.
Oh, with the blood transfusion?
Yeah.
To be honest, I think that good news is bad news right now. So like the market is so at its highs, they're like, when they hear good news, they think, all right, well, if we do get a cure, this does work, then you have to think about, will the Fed stop printing so much money and stop propping everything up? And then if they do that, or if there's a fear that they do that, then the market drops because people think, all right, well, the Fed is not in play anymore. So I think that it's kind of good and bad. But I think that I don't think that any of it really matters anymore. I just think that the market's gonna pull back a little bit because it needs to in the next month or if not this next month in September, definitely election month, it'll pull back. There'll be a much needed 10% pullback, 5%, 6% pullback, and then it'll just give you the opportunity to buy more of the companies we've been talking about. But love T-Doc, just saying, love T-Doc. That's a gem.
T-Doc has some big
Well,
pullbacks.
they're merging with Livongo Health. So when companies have mergers and acquisitions,
I'm finally up on it.
Yeah, I would buy more. T-Doc, even though it
took
was
a fall
down
today, right?
You said what?
It took a fall today, didn't it?
Yeah, I should have bought some today. Hopefully, it stay down a little bit tomorrow. I think that's a $300 stock in the making. So next year it will be 300. You can bookmark that. I said it.
If you have high conviction like that, you might as well go ahead and buy a call option out for a year. Put that money down, man.
In due time, I will. It's coming. I'll post it in the chat when I do. Hey, David, type in RXT. This is a company I want to look at. Amazon just bought a 10% stake in them. Purchased 10% of their business, or the whole entire business. They're in the cloud. They're a new IPO, but you have to take notice when Amazon invests in something and 10%, because they're scared that they're competing with their AWS business. That's something to take notice of. For only $18, this stock could be something to watch for sure. For a run up. Amazon's did the research on them. I like it. I think it could be big. I think it could be really big. Like Amazon investing in you, that's a big thing.
You think that's a potential acquisition or merger in the future, possibly, especially if they scout them this early? kind of see what's going
Well,
on?
they already invested 10%, so that leads me to believe that they're interested in working with them, or they believe in the company that much. I don't think they're just gonna buy them outright just yet, because I feel like they would have already done it. But they don't. Amazon just doesn't invest in every single company, so that's definitely a good one to watch. It's just on my watch list, on my radar. It doesn't have much data because it's a new IPO, but I think it's interesting.
Oh, so they just IPO recently?
Yeah. Mm-hmm. Also, Airbnb is about to IPO as well as Asana. I'm really interested in Asana.
Airbnb.
Yeah, Airbnb gonna be they're straight.
What do you think about like Carnival? You think that's gonna go back up?
I think it can, and I think you could even put like leaps on Carnival, but like the opportunity cost of my money. Like, is Carnival going to, even if it goes back up, is it going to outperform TQQ? Is it going to outperform Chegg? Is it going to outperform Tesla? And if it doesn't, then my money was best served there. I don't think that's not going to go up. It's just that I don't think that Carnival is just an exceptional business. I think it's an okay business. If you could only pass down to your child 5 companies, would Carnival be one of them?
No, sir.
That's kind of how I think about. That's kind of how I think about my investments. Now, it can be a great trade, so I won't say I don't have anything against them. It can be a great trade, but for me, it would just be a trade. It wouldn't be a long-term investment. Anybody else have any questions? I don't want to go over. David, you have anything else you want to go over?
No, I think you kind of hit a lot of things on the head. I think the IRA thing was definitely a new one. We'll have to dive a little bit deeper into maybe dive a little deeper into it on the next Market Mondays to get a little bit more visual aspect of it.
Like, yeah, maybe I can show like what I have in my IRA or something like that in one of the upcoming Market Mondays just to show. But it's really going to be the same as your regular investment account, but just keep in mind that you don't have to be writing a day in your IRA. Like, sometimes you'll be down on positions, but you might be thinking like in a 5 years out thinking, so I think it's definitely something everybody needs to be made aware of. Like, your money, it's not about what you make, it's about what you keep. So it doesn't matter if Tesla went up 400% and the government took 300% of your gains, because they tax you on that. Yeah.
That's a really good point. Do we have any other questions? Anything you wanted to look at before we dropped off? Going once, going twice.
If you guys have questions and you're scared to ask them here, ask them in the chat. And if you want us to look at your companies or anything like that, if you have a stock to look at, ask in the chat. And if there's no more questions, we will see you guys on the next Market Monday.
And silence is golden.
Thanks, Jay.
Mm-hmm. Yes, sir.
Maybe he said thank you. Thank you,
A
Jay.
question. I got a question. Your IRA is a Roth IRA, right? From Fidelity?
Yes,
Okay.
sir. I'm about to post a link in the chat so you guys can set it up. It's basically the same. It's still a brokerage account. It's just you're being taxed up front. So you're like, when the money that comes out of your check, you say you down, like, your net check after you get paid at work might be whatever it is, and then if you put that money in there, it's already been taxed. When you invest in your 401k, they take the money out before they tax you. So they set up your contributions and they put that money into the account before they tax you. So that's the only difference in it. And like I have DraftKings in my IRA, I have Waste Management in my IRA, I have TQQ in my IRA, I have DocuSign, TDoc in my IRA. All the same companies I tell everybody I like. That's why I invest in.
Hey Jay, I got a question for you on that note. With do you put a particular amount in each a month, or you pick 2 or 3 for that month? You like, I'm gonna put some money into these.
Based on really the chart, or like TQQ and XOXL, XPXL, even like VLO, all those you can buy every month. Like the really great companies you can buy every month, but like for something like Chegg or something like that, I really only buy it when it's at like this level, like it's at the 50-day moving average. It's in a buy zone, stuff like that. Like I'm getting it at a good value price. So, but like with TQQ or XPXL or something like that we always talk about, I kind of just try to buy it, every week or every month, whenever I get paid as I can. And I'm kind of bad about this too. I think it's a good topic because I'm bad about investing in my IRA, even though I know I should. Like I just like buying the stuff in my individual account more. I don't know why. I don't know if it's a site, like I don't know if it's because I can't touch them. Like I know it's for my retirement. I'm just like I don't want to think like that. But it's easier to put money in your individual account than it is in your retirement account to me. So I think it's like really important. Like I'll be buying like $100 or something, $200 or something. I'm like, dang, I should have put that in my IRA. So I thought it was really good to talk about it now, and just like that's like the best thing you can do, especially Black people. We're not patient sometimes when it comes to like we want everything now, and you really gotta make sure we make ourselves focus on the long game, the long term money. And when you invest in your IRA, it makes you think more long term. Like if Tesla has a pullback, since you're not gonna sell it anyway for 5 years, what's the point of worrying about it? When you're in your individual account, you're like, dang, this is dropping. I need to sell it. I need to get out. I need to cash my gains out. Like, the biggest mistake I ever made was selling things too early in the market. So, if you can hold everything for 5 years plus, you'll be good.
IRA, the Roth IRA, than to do like an Acorn or a Stash account, right?
So I have an Acorn account, but that's just like the way I look at Acorns. It's just like a little emergency fund for me. That's the way I look at it. Like if I need something to fall back on, and like after like my personal savings, like if I needed something like really really needed, like I can go to Acorns because I don't want to cash out my real IRA that like that I'm taking out. A Stash is cool. I think you can do a Roth IRA on Stash. So if you wanted to do that, if you're comfortable with the platform, that's fine. I think that Fidelity or Schwab or Ameritrade or companies like that, they're gonna have better customer service. Like you can call somebody and place trades and stuff. You can do options on there, and you can like some companies, when a new Stash is not gonna have that, or Acorns is not gonna have those companies out. I mean, let's say you really want to invest in the Airbnb and have it in your IRA the day of the IPO. You just want to buy Airbnb the day of the IPO. It might not be on Stash right away. So that's you muted.
Get it?
No, you.
Can you hear me now?
Yeah. But we can definitely go over everything in further detail, and like everybody like each one of us can kind of like show our portfolio and stuff like that. It's not like I don't just have hundreds of thousands or anything like that in my IRA. I invest $50, $25 here and there, just like everybody else. I just got good at the knowledge. I'm still acquiring the wealth, but everything works. So I just do everything when I can. If I see Chegg is down right now, and I don't have enough money for a share Chegg, I still buy $10 of it. Like today, I buy $10 of it. I like buy it. Do what you can, what you have until you can just buy full shares all the time. But I'm sure David said the same thing. Like I do not buy full shares. Like I can't buy a full share of Tesla every time it pull back because I'd be broke.
Right.
So, I mean,
Right.
sometimes the percent gain is still the same. If you make 10% on $10, it's still the same thing as making 10% on 1,000. It's still the same thing as making 10% on 10,000.
Yeah.
So
Look, I'll
remember
show you
that.
how to I'll show you how to turn $10 to 30 real quick.
Real quick. Man.
Yeah.
I did $35 the other
Yeah,
day.
'cause-
Tesla turned into like, ooh, that's up 40% right now. So it had me happy.
Ooh,
Had me
yeah.
happy. Had me happy. Even though it's $35, that percent gains is still. If that was
Yeah.
10,000, that's 4,000. So that $10, even if you get 40% on $10, it just add the zeros, and then imagine what it would be if you keep working. You know, you'll be able to do it because you got to get the basics of how to buy a stock, and then once you get bigger, it's just changing the numbers. It's just adding a zero onto the numbers. You know, it all works the same. If you can make 20% on $100, you can make 20% on 10,000 or 20,000, and then the numbers get ridiculous. Like,
Yeah.
so just
That's
don't
what I
ever
need.
don't ever be ashamed to invest that $5 at $10. I think Fidelity, the lowest you can invest on there is $10. So most times I'll at least do that. But like, yeah, don't be ashamed to do that because I definitely be buying those fractional shares of TDoc and DocuSign when I'll be saying bought
Oh,
some
I
this
do it
and
all the
that.
time.
Yeah, so
All the
It'd be
time.
like I bought. Everybody like, I ain't got enough money. What? $5?
this $5 gonna have to work. Like,
Yeah. Yeah.
gonna have to
That's all
work
the
for me.
buying power I got.
Yeah. It's still important just to have that habit, you know, that habit of buying when you see something.
Well,
Yeah.
we have a hard stop at 8:30, so Jay, we appreciate you again, man.
Appreciate y'all.
Keeping it going. We appreciate a good crowd. Gio, it's good to see you.
Yes, sir.
Coach,
Your
we
boy
see
is
you.
skinny now.
All right, here we go. Brendan, any last words?
Nah, man, we'll catch y'all next Monday. And hit the
Yeah,
chat this
man.
week.
Gio, man, love to see you losing that weight, man. Congratulations, man. See you over there 198, about to get that
Yes,
6.
sir. Yes, sir.
Well, man, I'm gonna call you tomorrow.
All right.
I'll talk to y'all boys later. 1.